Hi everyone, Scott Schweiger back with another Tuesday tax tip. Last week we talked about the self employed health insurance deduction. Whew, that's still a mouthful. This week we're touching on a hot topic that is 1099K reporting. Yes, 1099K reporting is stepping into the spotlight with a change to the reporting requirements in 2022. For those of you who are unaware, the 1099K reporting requirement is being brought in line with the other 1099 reporting requirements. I'm looking at you, 1099 miscellaneous and 1099 NEC. Basically, if you receive $600 or more from credit cards, debit cards, or other third-party payment networks, you'll be issued a 1099K along with the IRS. This is a huge departure from the prior limits, which were $20,000 and 200 transactions. What platforms does this impact? Well, selling on Amazon, eBay, or Etsy for starters. Also, if you take payments via PayPal or Stripe or Venmo or QuickBooks Payments or Clover or Square's Cash App, not to mention any traditional merchant service provider, and obviously this is far from an all-inclusive list. Interestingly though, the payment network Zelle has publicly stated that it's not subject to the 1099K reporting. So the loophole that they're relying on is that they assert that they don't actually transfer funds between buyers and sellers. Instead, they're a messaging platform between financial institutions and people who are making payments. We'll see how well this works out for them, but Zelle is backed by the banking industry, so they may just have the clout to pull this off. So, what does this reporting change actually mean? Well, more people are going to get 1099Ks, especially with the rise of the side hustle economy. And that's kind of the point here. The IRS is trying to capture this information, but it isn't some huge deal. Or at least it shouldn't be if you're already reporting your income correctly on your return. Look, the 1099s are just information returns. They tell the IRS that you received money. It's up to you to tell the IRS whether it was taxable or not. And if you're reporting your income accurately, you have no issues here. Also, you're not going to receive a 1099K for your personal transfers. That Venmo payment to split out dinner or your portion of the rent, not subject to the reporting requirements here. This is a key piece of information that just kind of fades into the background during the reports and discussions on the 1099K changes. Only business-related payments are applicable. So if you buy something online or you pay for a service. And most of these networks let you tell them if that's the case or if it's a personal transfer. PayPal has had it for years, and Venmo, once they started entering that business space, it too added its little toggle button to go between personal and non-personal payments. So the next time you see some article about 1099K reporting changing things for business, relax. There's little to no meaningful change here, if you aren't trying to underreport your income, that is. Now, obviously, how this tip is going to impact you will depend on your particular set of facts and circumstances, like if you have a third-party payment processor or if you accept credit card payments. If you have specific questions, please reach out to your tax advisor or feel free to contact me. Thank you so much for watching, and I hope you join me next week for another Tuesday Tax Tip.